Hello everyone. Last night in some Chicago-based economic club, our former Reserve Bank Governor Raghuram Rajan interviewed the Fed chairman, and it's one of the main reason why last night US market crashed. So in this video, let's discuss about it first, then followed by we'll discuss about our regular pre-market report for today, 17th April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. I mean, if anyone wants to view the full press conference and interview, please have a go. I will attach the link in the pinned comment section. Anyway, we can summarize his interview in three simple points. One, Fed chairman said that the number of jobs available in the US softened to pre-pandemic level, not like elevated level which we have seen in 2024. He mentioned at present every month on an average people getting new jobs is roughly 1,50,000 and not many people are changing jobs. So the unemployment rate was maintained and stable in the last 3 months. Then second, regarding PC inflation, for the March month, the official data haven't yet released, but he said informally the 12-month average headline PC inflation was 2.3% and the core PC inflation was 2.6%, which will be 0.2 to 0.3% inflation less compared to February month. So this is also a good one. He acknowledged the fact that the inflation is slowing and moving towards his 2% target. All good, isn't it? So investors were expecting him to give some clue about rate cut. Here is when all turned around. Third point which market didn't like. He said Trump tariff was more than what Fed and the members were expected, more than what they think as an upper range. So he's afraid this is posing a huge risk on inflation increase again, and thus he don't want to change his policy stance until he ensures the inflation surge due to tariff is one-time increase but not the persistent one. In simple, he wants the longer term inflation under control rather supporting the slowing economy. Even Raghuram Rajan asked the Fed chairman whether he will step in any bond market or stock market if it crashed. For that also, Fed chairman simply said no, and markets are struggling because of uncertainty, and that means markets are functioning and he wants to keep it that way. I mean, this is my yesterday's trading notes. Roughly 1:30 p.m. Indian time, I did thought Fed chairman hawkish speech as a risk that can push the market down. But because Trump is very aggressive against all his opponents nowadays, I thought he will downplay all this tariff issue and be kind of neutral. But I'm wrong, he was hawkish instead. So US market reacted negative. In addition, yesterday Trump imposed trade restrictions on all chip export to China. I think it's just US forcing method to bring China on the negotiation table, which in turn crashed all the semiconductor stocks. Nvidia was down by 6%, AMD was down over 7%. In simple, Fed Chairman Powell and Trump's new export restrictions made the US market crash. In the end, Dow Jones decreased by 1.73%, S&P 500 was down by 2.24%, and Nasdaq was the major dragger, decreased by 3.07%. In case of US VIX, it increased 8% and moved above 32. Regarding Indian ADR, as it is, only ICICI Bank closed positive, all others closed negative, especially both the IT stocks crashed around 3%. Then if we calculate the arbitrage, as I explained in the last video, investors preferred Indian ADR stocks over Indian actual stocks. So there is a significant dollar premium is developed now. Whether it's permanent or temporary, only time has to say. But for today, I think both the banks having some positive bias arbitrage and both IT stocks having over 2% negative arbitrage. About GIFT Nifty, today early morning it traded around 23,255, equating that with the spot market indicating the potential gap down opening of 150 to 180 points. So that's all about what happened on global market. Now let's discuss the India related info. First, about institution. For the second day in a row, FI was net buyers. They net bought the shares for near 4,000 crore rupees and DA net sold the shares for 2,500 crore rupees. Then coming to derivative market, we know today is weekly options expiry. So I don't think future market will play a major role today. But status wise, it was same as Tuesday. No stance change. If required, please pause and have a look. Whereas in the option market, proprietary traders becomes more positive. They increased their net 2% open interest bullish position to net 3.6% open interest on the bullish side. So they make more money if market goes up. But on the other hand, both retail traders and FII wants the market to close neutral with negative bias. Second, just for info, today in the aftermarket hours, Infosys is going to release their earnings, and then on Saturday, HDFC Bank is going to release its Q4 results. I mean, tomorrow Indian market is holiday, so on these two stocks, today we can expect pre-result release related stock price adjustment. So let's discuss about the preview. First, Infosys. Quarter over quarter, as per Bloomberg, revenue to increase 1% and net profit to increase 2%. In addition to this, market expecting a guidance on business impact due to Trump tariff. Then about HDFC Bank, I don't have Bloomberg estimates, but this data is from Economic Times. Their net interest income or otherwise bank's revenue to increase 7% compared to year over year around 31,200 crore rupees, and net profit to increase 5% to around 17,100 crore rupees. So not a super growth expectation, but okay. In addition to the top line, market expecting HDFC Bank to have net interest margin of around 3.4% and no deterioration in the net assets, otherwise no NPA increase. So overall, as a summary, US market closed super negative. In line with that, both ADR and GIFT Nifty indicating the negative trade. In addition, weekly option expiry and market holiday related volatility all going to factor in today's price action. But for now, all indicating the gap down opening of over 150 points. Moving on, as per stock open interest, Adani Total Gas Limited, Sonata Computer, Maruti, Mahanagar Gas, and Infosys are some of the stocks that got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Indian Bank, Hindustan Zinc, Inox, Wipro, and NBCC are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, Infosys, HDFC Life Insurance, HDFC AMC, Geofencer are some of the major listed companies is going to release their earnings. Regarding macro, during our market hours in the afternoon, Germany's wholesale inflation is due. Then in the aftermarket hours, Europe interest rate decision is scheduled to release. Then in the night for US, new number of housing starts, weekly jobs data, and Philadelphia manufacturing index are some of the things we need to keep an eye out today. One more thing, yesterday US imposed new sanctions on Iran targeting Iranian oil export to China, which in turn increased the oil price by 2%. So at the time of this video, WTI crude trading at 63 US dollars per barrel and Brent crude traded at near 66 US dollars per barrel. Coming to technical, Nifty opened 20 points gap up at near 23,340 and was range bound throughout the session. However, in the final hour, it increased and closed above 23,400. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with a minor lower shadow by sustaining the higher high, higher low formation for the third consecutive day. In addition, it closed above the 200-day exponential moving average and the 78.6% Fibonacci retracement, while the 5-day exponential moving average crossed above 10, 20, and 50-day exponential moving average, indicating the positive trend. Furthermore, RSI momentum indicator trended upward at 57.44 and MACD gave the positive crossover above the zero line, both supporting the positivity. Hence, the support is now at 23,300 and a decisive fall below 23,300 might trigger a correction towards 23,150/23,000. On the higher side, hurdle is at 23,650. In case of Bank Nifty, it opened more than 300 points gap up and outperformed Nifty, then closed at above 53,100. Thus, on the daily chart, Bank Nifty formed a long bullish candle with minor upper shadow. In addition, it closed at the upper line of the Bollinger Band and also saw a long trend line breakout and a golden crossover with a 50-day exponential moving average crossing above the 200-day exponential moving average. Furthermore, RSI stood strong at 67.69 and MACD remained in the positive crossover, all indicating the upside potential. Hence, the immediate resistance is at 53,450 with key support at 52,800. As per the weekly options data, the maximum call option openers was at 24,000 strike, followed by 24,500 and 23,500, with maximum new call option writing at 23,450 and then 23,800 and 24,300. On the put side, the maximum open test was at 23,000 strike, followed by 23,300 and 22,500, with maximum new put option writing at 23,400 strike and then 23,350. Thus, from options data, 24,000 is the key level to watch on the higher side, while 23,300 is likely to be the immediate support. The broader trading range is expected to be between 23,000 and 24,000 in the short term. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.